From FXCoinz, this is Christopher Lewis taking a look at gold and silver. The backdrop in which we're dealing with right now is one of a lot of uncertainty, as peace has kind of been established in the Middle East, but not really. And therefore, you have a situation where traders can deal with the random headlines that throws the interest rate market around. And most retail traders don't pay attention to this, but it's the interest rate market that drives everything else. Currently, we have very high levels of interest rates in places like the United States, Germany, the United Kingdom, and that does cause problems for certain assets that are non-yielding, such as gold and silver. And it's through this prism that we find ourselves trying to trade these markets and make some type of headway in an environment that, quite frankly, is going to remain very tough. After all, nobody knows when the next tweet or rocket gets sent into the market's collective thought process. So, with that, I look at a lot of the moves with a bit of suspicion. Looking at the gold market, we are approaching the $4,600 level. That's an area that, of course, is important. I do think it's an area that could cause a little bit of a headache, especially if we start to see the 10-year yield rally in America. If it starts to fall apart, then that opens up gold to go all the way to the 50-day EMA, I suspect. Ultimately, though, this is a market that will remain very jittery and probably one you need to be very careful with. The silver market has found a little bit of positivity early on Tuesday and could go looking to the 50-day EMA. Again, though, the interest rate situation has a major part to play in what happens with silver. After all, silver is non-yielding and, of course, very volatile in its nature anyways. Again, I'll be watching to see if we get interest rates falling, especially in the United States, because if we do, then I think a move to the 50-day EMA makes quite a bit of sense. In fact, you're probably looking at a move to the $80 level in that environment. The $80 level has been important resistance as well as support in the past, so a little bit of market memory comes into play. If those rates starts to rally again and rise, then I think $70 gets tested.